I've helped guide over 500 people into retirement. And these are the main lessons that I think everybody needs to know, both the good, the bad, and the ugly. So let's go for a walk on the good, this beach here in Costa Rica during sunset. And let's talk about some of the lessons I learned. And the first one is it's really important to be thoughtful and deliberate about when you decide to retire. We cannot turn back that clock. And so many people, it's just so easy after working for 20, 30, 40 years to just postpone one more year, one more year. And before you know it, you've postponed the youth of your senior years and you postpone through your healthiest and most active years. And then maybe a health issue comes up and you wish you hadn't done that, but you can't unwind that. So that's number one. Number two is the value of having a plan, of knowing what your game plan is, having run the numbers, having worked with somebody that's helped guide other people into retirement to make sure you're not forgetting something, and having the conversations with your loved ones. On, let's say you're married and your spouse, the two of you getting on the same page was really valuable. And having a third party, a financial advisor there to help guide you through it. And then frankly, I've been the bad guy in many relationships where, one of the spouse tells me something in private and, how do we incorporate this or how do we get this into the plan? So it's nice to have a third party be the bad guy as opposed to one of the spouses. So that's the second thing. Before I jump on to the third one, I do know that many of you are never going to use a financial advisor. The only financial advisors in general charge about 1% a year. And if that's you, I do encourage you to not use Excel, to not use Google Sheets. It's too easy to make a mistake. It's too easy to forget something. Use software that's designed for you. The software that I like is called Bolden. If you use the link here or in the description, you'll be supporting the channel. It's very inexpensive. It's about $120 in year as I record this. So the value of a plan, the old saying, I went to college on a military scholarship, and the military is big on planning. And the military says, you're either failing to plan or you're planning to fail. So which one do you want? Okay, let's keep going. The next one is, frankly, it's not going to be easy to switch from being a saver to an investor. And I encourage you to start thinking about that transition sooner rather than later. You don't want to get into retirement and waste the first 2 years because you're not comfortable spending money. And I can tell you about half the people I know fall into that trap when they retire. I don't want to see that happen to you. The next one is just, it's the old Stephen Covey adage, which is begin with the end in mind. And what I mean by that is look at your investment accounts. There's a lot of stuff on YouTube about doing Roth conversions, converting a regular IRA that you're going to have to pay ordinary income tax into a Roth IRA. But better than that, you don't want all of your money in a Roth. You probably don't want all of your money in a regular IRA. You probably don't want all of your money in a regular taxable account. And I'm putting these 3 fists up here because those are 3 types of account. The easiest way to do this is to think about, okay, when I'm 65, when I'm 60, when I'm 55, about what percent of my retirement assets do I want in each of these categories? And rather than try to switch it around later, try to build it that way from the beginning. Now, it used to be hard to do that because there's income limitations that limit who can contribute to a Roth. And yes, there's ways around that. But now that many of our companies have a Roth 401k option, it gives many of us the flexibility to think about, what do I want these accounts to look like later on? Okay, The next one related to those three accounts, remember the what I call a tax me later account, which is a regular IRA or regular 401k, a tax me never account, which is your Roth IRA, your Roth 401k, and then a tax me as I go account, which is your regular taxable account. The nice thing about having those three accounts is for many of us, for the first time, we can control how much tax we pay in any given year based on where we take our money out of the accounts. So thinking and understanding that your taxes are going to be one of your biggest expenses in retirement and planning accordingly. And for many of us, it makes sense to hire an accountant to help us with this. I will tell you thematically, what we're trying to do is we're trying to fill up the two lowest tax brackets in the U.S., on the federal tax level, the 10% and the 12% level, before it jumps up to 22%. The third level is not 14, 16, or 18. It goes 12, it goes 10, 12, and then it jumps to 22. So filling up those quote-unquote lower tax brackets can really pay for itself in spades, and you want to be thinking about that sooner rather than later. Another thing you want to be thinking about sooner rather than later is, what are the things that are important for you? How are you going to find new friends once you retire? How are you going to find your new purpose? And there's a great book to help you think through it. Actually, I'm going to give you two books. The first one is to help you think about your purpose. That can be a big issue for a lot of people, is finding what gets you excited to wake up in the morning once you're retired? And oftentimes people are like, well, Azul, if I can't think of these things, why would I retire sooner? Well, the reality is you likely will think of these things. And once you make that conversion, once you make that transition, then most people are like, I really wish I had started this new life. I had turned the chapter to the new chapter in my life and began that chapter sooner. So thinking through what your new purpose is going to be, thinking through how you're going to make friends and what you want to do. And to help you think through your new purpose, there's a great book by Arthur Brooks. It's called From Strength to Strength. And then for the things that you want to do in retirement, and this is a great book if you're married or have a significant other in your life, to read with your partner and talk about. It's called Die with Zero. It has a funny name, but I think it has really good insights about, money is a tool. Money is energy that we saved up for a future day. And we want to use that energy at a time when we can take advantage of it. For instance, I learned to surf when I was 50 years old. I'm really glad I did, because now, I've been here for a while and I go out there and I surf every morning. But you know what? I'm tired and I'm sore from it. So thinking through your purpose, thinking through what you want to do in life can be really critical. And the last thing is thinking through, when do you pull the trigger? When do you actually retire? And that's why I made this video up here. Why waiting to 65 to retire might be a big mistake. Thanks for watching this video. I'll see you in the next one. Bye-bye.